I have been preaching this for the last year. That was the time to buy. Because look, if someone was selling their property in the last year, they had a really good reason to do it. Like, why would you sell unless you absolutely had to? And if you're a buyer, you don't have as much competition. So sure, is there still some more distress to play out? Of course. What happens when 3 or 4 times the amount of buyers come back into the marketplace? At the end of the day, this business, sure, it's about cap rate, but it's also about supply and demand and how much competition there is. So I'm feeling really good. I think even this last week, everybody's the phone's ringing, people are looking at stuff. They want to get back in the game.
Great. So welcome to another episode of the Broker Brunch. For today, we have James Nelson and my partner Mitch Flaherty. Hey, Mitch.
Good to be here. Thanks for joining us, James.
Thanks for having me.
One thing, James, before we jump in, I think both Mitch and I agree on this, that you are by far the most optimistic and energetic person that does this business. And it's one example I have of this is I was at a networking event about a year ago, and a young guy, I'd say no more than 21 or 22, came up to you, and you just treated him like he was the most important person in the room. It was clearly his first week in the business. He had a ton of questions for you, and I watched you talk to him for probably 15 to 20 minutes, and you gave him your card to see if you could help him out. And I just feel like that kind of optimism and energy is what separates you apart from the rest of 99% of brokers, because not many people would do that. And just wanted to commend you for...
Wow. Well, I really appreciate that, and I'm hoping that I can kick up the energy a little bit here. I know typically, you have your whiskey drinkers here. I'm not a drinker myself, so what I brought instead were a couple Red Bulls.
Yes.
So I figured, now I've got yellow edition. I have no idea what's in this. I'm sure it's not natural.
Thank you very much.
We have a red can. This looks like watermelon.
I love it.
And
Thank you.
We've got coconut. So everyone good with their choices?
I love it.
Okay.
It's good.
I figured if Red Bull. Oh, cheers.
Cheers.
Yeah, cheers.
And they can send us in a bunch of cans now, hopefully, for any Red Bull.
This is why I partnered with Brian, the Irishman. I know it's not alcoholic, but we get to have some fun.
Well, I figured if Red Bull works for skydiving and shooting people out of cannons, it probably works for real estate. I don't know. We'll find out. Let's see what happens.
Is this your key to keeping that kind of energy?
If it is a late night, I will be known to take down a Red Bull or two.
Yeah. It has that little zip to it, I find, right? But then there's usually a crash then about an hour later. But
yeah. Well, it says there's taurine in it. I don't even know what that is. Maybe no one does. So
it's good
it's
stuff.
probably better not to know, right?
Yeah, just some things you just go for. But cheers,
good.
thank you. Yeah,
Thank you.
Everyone kind of brings in their own thing and makes the episode their own. So
good.
Yeah.
So, James, you're obviously a very successful guy, huge success in the industry. We were curious, speaking prior to the show, what keeps you motivated? What keeps you going? Obviously, you don't need to be doing this. We're just curious what keeps you ticking over. The next deal?
It's really simple. I love what I do. It's a lot of fun. I mean, it's certainly a lot of hard work, as you both know. Can be some disappointment, but it's a business where every single day is different, and every day you learn something new, meet someone new. And it's just fascinating to me. It just never gets old.
So true. If I could take you back 25 plus years to your first day in real estate, I think you walked into what was Massey Knackle at the time. It was probably just Paul and Bob in an office not too much bigger than this studio. What did you do that first day?
Wow. Well, first day, I don't know. Well, I remember my interview because I had only been to New York City 1 or 2 times. Grew up in Wisconsin, Maryland, went to Colgate. That was my connection through Paul. And I didn't even know what real estate was. I mean, literally, I just all my other friends had investment banking jobs. I needed, this was late into the spring year, and I said, all right, let's see what the Career Service Center has. So I filled out the application and showed up. And there's still something today, about Park Avenue that's just wow. And it wasn't a huge office, but it was on Park Avenue. Now, little did I know that our landlord, who was a great friend and client and supporter, they'd give us space, but the deal was we'd have to move at any moment if they needed it. So we were always kind of like a little bit of nomads, but it was a great way to start. And the most important thing was just being able to learn from Bob and Paul. Mentorship is so important, and so to be able to sit 5 feet from both of them and just take it all in. No one sat me down and said, James, let me teach you the business, right? But just listening and learning. They both definitely have their own style, and it's very complementary, and learned a tremendous amount from both of them. And to today, they still remain great mentors of mine.
How do you I guess, emulate them or try to emulate them? Do you take like pieces of what you saw from both of them and try to mold it into your own?
Well, I appreciate the compliment at the start about taking time for young professionals, people getting into the business, and that was something that Bob and Paul definitely instilled in all of us, right? And the sheer fact that they, picked up the phone, gave me a shot. I mean, well, listen, later they told me that only 2 people applied for the job, and I was their second choice, but that's okay. We don't have to dwell on that. But the point is that, they were always kind and, at the Rebney events and just being there for others. Because I'm sure, they spoke about how Steve Siegel was this incredible mentor to them.
Yeah.
So, it's this whole
It's
pay
a
it
whole
forward
full
thing.
circle,
I haven't seen that movie, but I think that's the premise.
Yeah. You got into the business, you worked with the guys, you probably had an unbelievable seat being it, seeing that whole business grow. How did you kickstart your own career from being, say, in the office with the guys to taking full flight yourself?
Well, it was about a year working alongside Bob, and I probably have stuffed more mail in my. You could fill up this entire room with the amount of mail. That was back in the old days where there was actually fax machines. You guys probably don't even know what that is, but we do multi-fax blasts, right? And I did get one of the first cell phones that were humongous and probably had a satellite dish attached to it. But
what year was this?
This was 1998.
Okay.
So, and of course, I forgot the question.
We were just saying, how did you get going? So you were
how did
working
I
with
get
the
going?
2 guys. And
So it was really helpful to start off as an associate and take a running start, because I was, $5,000 in debt when I came to the city. I did not have, a bunch of money saved up, and, going full commission is a very, it's a tough thing to do, especially in a really expensive city like New York, even though my first apartment I shared with 3 other guys and, $400 a month, but still just, the cost, right? And, but to have that salary to be brought in on some deals, and then when I finally got my own territory, to actually have 1 or 2, real listings right off the bat. I got really lucky in that the first listing that I got signed up for was the best possible listing you could get. It was a 50-unit elevated apartment building in Chelsea, super low rents, out-of-town owner. And I remember that first pitch because, I'm so excited. I've done the numbers. And this guy's coming up from Florida to do the pitch, and I'm sitting there with Paul Massey, and we're going through the whole thing, and Paul just stops in the middle and looks at the owner and says, you know what, you really shouldn't sell this asset. This is a great asset. And I almost, I was going to kick Paul under the chair. What are you talking about? This guy's here. I want to sell.
Yeah.
And he says, Paul, I appreciate that, but this is a lifestyle thing for me. This thing's a headache. I want to move on. And I learned a very valuable lesson. Really important to put yourself in your client's shoes, because for me, I'm just looking to make my first commission.
Course,
I'm whatever this guy wants to do with the money, great.
Right.
But Paul was okay, selling, unless if you have a plan, whether it's to exchange or whatever else, when you sell, you end up paying a lot of taxes, and then that's kind of it. So he was really flushing out the motivation on that. So I was lucky. That's a very long way of answering your question. That I was lucky that the first, deal hit, the second one, and it was, that first commission check was more than I'd ever seen. And thankfully from there, had a really great run until, of course, 2009. Okay. Great financial crisis. Watched my income drop 90% from 2007 to 2009. So might be,
Wow.
Hopefully, I don't think we got to that point over the last year, but it was starting to get a little close. I mean, obviously COVID was 2020 was pretty scary as well. But, the amazing thing about New York is it always comes back.
Thank God, yeah.
So on that point, you've seen previous market cycles with 2009, just jumping into the real estate topic right now. Where do you think we're at now? Obviously, the Fed dropped the basis points recently last week. Where do you think we're going, and where do you think the next 6 to 12, 18 months?
Yeah, I'm super excited for all of us. I wrote a white paper on this, on the psychology of the real estate market. So look, it's great that it's 50 bips, but even if it was 25 bips, just the psychology. I think the biggest challenge over the last 2 years, and as you both know, sales volume was only at a third of the 10-year average, right, for all asset classes across New York City. The biggest issue is that buyers and sellers, in large part, were on the sidelines not doing anything because mid-22, rates start going up at an unprecedented level. The real issue is no one knew how long this was going to go for. So if you're a buyer, like who wants to catch the falling knife? Who wants to jump in? They're reading the headlines. This bank's selling this for 20 cents on the dollar, 30 cents here. And so the buyers are saying, well, I want to wait and buy at the bottom. I want more distress. So what do? Nothing. And then sellers say, well, I don't want to sell into this. And so everybody's waiting. So now this rate cut is so significant because now people say, oh, I missed the bottom of the market. So now buyers say, I better jump in, while I can still find some opportunity. And sellers say, hey, I'm going to finally have the wind at my back. So I think this is going to be super positive. And I've been this isn't just something I came up with a couple weeks ago. I have been preaching this for the last year. I know Bob has too. That was the time to buy. Because look, if someone was selling their property in the last year, they had a really good reason to do it. Why would you sell unless you absolutely had to? And if you're a buyer, right, you don't have as much competition. Mm-hmm. So sure, is there still some more distress to play out? Of course. What happens when 3 or 4 times the amount of buyers come back into the marketplace? At the end of the day, this business, sure, it's about cap rate, sure, it's about your NOI, but it's also about supply and demand and how much competition there is. So I'm feeling really good. I think even this last week, everybody's the phone's ringing, people are looking at stuff, they want to get back in the game.
We're seeing the same, and I think momentum is such a key ingredient in this business or in anything, right? Once you start building momentum, and because the last few years have been what they've been, it was more about survival. Can we keep a couple of deals going? Can we keep the lights on? And now it just feels like, okay, for the first time, there's been actually some positive news. Mm-hmm. And the sentiment now is that, maybe that was the tough period behind us and we're heading into a new chapter, hopefully. And 2025 is around the corner. And I think that we're all going to have opportunities now to make deals in a lower interest rate environment. I know it's not going to be a like-for-like drop. Just because it goes down 0.5% doesn't mean that lending rates necessarily go straight down. But I just think if we can capture that momentum and build on it, we're going to be in a really good place in 6-12 months.
No doubt. And there's also, for the brokers who are listening, the other thing you'll find out, it was when you have a downturn like we've experienced in the last 2 years, what does it do? It weeds out a lot of the competition. Brokers who are just kind of, I don't want to say part-time, but they're not really in it. Yeah. They go on, they do something else. They go back to school, they move on. Yeah. And those who show up and put in the time and work are rewarded. Yeah. And that's exactly what happened in 2009, maybe because I didn't know any better. I mean, we just kept showing up every single day and nothing was happening. But I'll tell you, in 2009, I didn't even know, sure, I'd heard of loan sales, but I'd never done one. I didn't even know how it worked. But sure enough, we just started calling banks, and then all of a sudden, the floodgates just opened. Mm. And not that I think that, it'd be wonderful if this recovery is as dramatic, but 2010 became a record year because we were representing every major bank that had these non-performing construction loans. Mm-hmm. It's a little different, this go around, and some of these lenders certainly doing some loan sales quietly. We hear a lot of that, but we're seeing a lot of short sales now. And that's, I think, even better for the sellers and the banks. Mm-hmm, mm-hmm, mm-hmm.
We've been hearing a lot about that for the last few years, ever since COVID, really. But just to hammer that point home, I think that market sentiment's a real thing. I think the comps are obviously lagging the market, so it's going to end up catching up. And as you previously mentioned, the bottom's gone, and now the psychology and the momentum's coming back. So it's exciting times.
Yeah, that bank business.
Are you sure that's not the Red Bull talking or no?
Maybe. That's okay. I could drink Red Bull every morning.
That bank business, if you can capture it, Paul Massey used to always preach it to us as well.
He did, yeah.
It's just great business once it comes in, but we've spent a lot of money on lunches and breakfast and trying to wrangle our way into with the banks, and they all have their guys, and they probably made the relationship in 2009 and 2010, and for us now it's we're trying to come in with maybe their you know, their number 2 guy or their number 3 guy and say,
Yeah.
like, give us a dog in the portfolio, let us underwrite it.
Right.
And we're just trying to like get these valuations in there.
It's, I mean, you guys know this, but we're in the information business. So the more data, you just keep hitting them with market reports and comps, and just, you know, say, look, you're doing the exact right thing. And it's just a timing thing. A lot of these banks, you know, they keep it on their books until, you know, they can't wait any longer. And the servicers, and I don't know, you know, if there's any servicers listen, you know, feel free to reach out to me, and if you can say or prove otherwise. But it's when you're working with a servicer, you know, they're getting paid fees along the way, like they're running the property. So like if they sell the loan, they're done with the assignment. So I've never, you know, seen a servicer who's like quick to, you know, rush a sale out the door, right? It just takes a tremendous amount of time.
It really does.
And look, there might be some of this, you know, let's wait, let's see if the market recovers. Like there's always that, you know, pretend and extend aspect too.
It's not like you're dealing with an emotional mum and pop that's owned the building for 40 years. It's a very different dynamic.
Yeah, just a different mindset. So, so you've had a great run as a broker. It seems like you've diversified yourself over the last few years. You know, just from a distance, it seemed you're an author. You know, you've got a book out there which we can chat about as well. You got your own podcast. You built a team at a new company. Avison Young is privately held, right? It's not a. So you've seems like you've spread yourself pretty well from your old territory days at Massey-Knackle.
Yeah, no, we have an incredible group, and Avison Young, I always tell people it's kind of the best of both worlds between a Massey-Knackle and a Cushman. I mean, after we sold Massey-Knackle to Cushman, I had 3 incredible years there, and then Avison Young had reached out and said, look, here's an opportunity to build out an investment sales platform from the ground up. So, in Avison Young, we're a privately held company, so I'm one of 750 owners of the company, but we're also global and full service, which I found was important to our clients. So the opportunity to think about how to build one unified sales team to cover the entire city was really appealing. And so our brokers specialize by asset class, but we all work as a group. Everyone gets paid on every transaction. We meet every morning as a group, and we go around the table, you know, and Monday we talk about multifamily, Tuesdays retail, et cetera. So it's worked out really well, and that's why, you know, I've been doing this long enough that, you know, of course I want a big market recovery, but, you know, we have brokers who are earlier on in their careers, and like they've worked really hard over the last couple of years, and so you really want to, you know, see that hard work pay off.
Yeah, for sure. And like Avison Young, it does seem like it's positioned well, right? You're probably nimble enough that you can cut through a lot of red tape, maybe that some of the publicly held firm doesn't have, but you have a reach as well, I think, which is really important. And
yeah, it's you know, where you choose to broker, and it really depends on, you know, how you like to operate and preference, and so, you know, that's why there's a lot of different options there. There's no right or wrong. You know, it works for me in that I like having that ownership stake. I like having a seat at the table, and so no one's questioning me. You know, James, what are you doing here? I mean, obviously that comes with a lot of trust, and then you have to deliver. But it's you know, as far as I'm concerned, when you're doing brokerage, you know, it's challenging enough to get the deal done. You don't need friction when it comes at the firm and how to, you know, get things done. So Avison Young's been incredibly, you know, supportive, and it's a great platform for us to operate.
Everyone wants skin in the game, and your team structure is kind of unique in the market because not everyone has clear fee sharing agreements, and that creates for a happy camp, which we found at our previous firm. I was curious, like, to the rationale in terms of the asset class versus the geography. What made you go down that route versus the geography route?
Yeah, the geography. What I found, you know, for the first 5-10 years of my career, and clearly I was drinking the Kool-Aid at the time, and it worked, that buyers were very interested in, you know, just one specific neighborhood. You know, today, buyers, when they want to buy multifamily, they want to look generally in an entire borough, and not to say that some don't say I want to be downtown here or there, but they might say, well, I want to look in Greenwich Village, Tribeca, Soho, but I also want to look in Williamsburg. So if you're at a territory shop, you have to say, okay, well, talk to these 4 brokers. And they'll say, well, I don't want to talk to these 4 brokers. I want to talk to you. So I think that's part of it. I think the other part is, as you all know, that these asset classes get so complex.
Yeah.
Like multifamily rent regulation is really complicated.
Unless you're in it full time, you're not going to understand it.
Exactly, and same thing with development, same thing with retail, office. So we just found. But look, the territory system, if you're a company, is still an incredible way to cover a city, because that way you are truly block and tackling, and you're not missing anything, right?
Yeah.
So the other way to do is by asset class, and the third way would be working with the client. So focusing on, I'm going to go wherever the client goes, which is really, I think, the way to go if you're doing mortgage brokerage.
Right. True. Yeah. Trying to, because we've seen a lot of debt teams try to immerse themselves into to go around with sales brokers, and typically we've seen that it's more important for them to know, who's lending, what the different products are.
Right.
It's not necessarily important who owns on the corner of 35th and Madison. So we definitely see that. So the brokerage seems like it's humming along well, which is great. How do you keep, because this is something we're interested in as we try and grow as well, how do you keep like young, hungry brokers engaged in the mission and buying into, not only what you're building, but making them feel a part of that?
Right. So I would say, first of all, today when we're looking to add to our team, we're very selective, but we're usually looking for minimum 2 to 3 years brokerage experience. And it kills me because someone gave me a chance right out of college. There's so many, these kids, and today it's like you graduate college, you already know you're Argus certified, you've interned at all the places, but I found there's no substitute for just, 2 years of just pounding the pavement, pounding the phones, and, sure, depending where you came from, do you pick up some bad habits? But that experience, and also the fact that after someone does that for a year or two, banging their head against the wall, they still want more.
I've been there.
It's like, okay, this person's going to make it, right?
Yeah.
So I think you got to have the right people, for sure. But then you have to have an environment where it's just everybody, like, and I'm sure it's the same way with you. It's like there's no locked desk drawer, right? Everybody's hearing, the information's there. People have it, so they get to plug in day one to our team. So like you join our team and like automatically you have access to every single deal that we're listing. There's nothing that's like behind closed doors. And I think that's really appealing. And then the last part, of course, is the compensation, because if the compensation is not matched with, what the value they're bringing to the table, and it's actually, that's kind of the hardest part to get right. And by the way, nothing's perfect. Right? Nothing's perfect. But we have 3 major buckets of compensation. It's still the largest bucket is for origination. That's the person who brings in the listing, as you know, because if there's no listing, there's no business, right? And then we've got the execution team, and then we've points, and then we have just the general pool points is what we call. And that's just for being a good citizen and showing up, because you might have a year where nothing happens in retail sales, but you're covering your market, you're bringing the comps to the table. Maybe you have some retail buyers who say, let me go try multifamily or vice versa. And so, but you also have that situation where, you're in a team meeting and like every single deal closes and like everybody's like pumped up, like, because everybody, had a piece of it.
Yeah. For you personally then you got guys bringing you deals left, right, and center, originating their own deals, servicing your business, I'm sure. And then how do you operate for me, it's so taxing, I find, to juggle the deals that I have in my head. So I can only imagine when you add 15, 20 people underneath you and you've all their deals plus your deals. How do you stay tuned in to where your deal is at and also go out and do podcasts, write books, grow companies?
Well, for starters, I would say I have a tremendous amount of help for sure. Like, there's no way that I'm doing all this stuff, and I wrote a book, but Rachel Hartman really wrote the book with me. She was on the cover. She's amazing. I still work with her weekly. And I had an incredible team, and McGraw-Hill, my publisher, and helped with my social media. So that all doesn't just happen on my own. I mean, I would be, completely lost without the support. So that's for sure. But it's like, how do I stay on top of everything? How do I prioritize? Of course, there's no substitute for hard work. So like getting in early, getting my stuff out of the way, trying to be responsive, but it's a battle I fight every day. But like, look, and I think we were talking before we started recording that I'm a progress, not perfection guy. So it's kind of funny, and I've never shared this outside the team. I'm giving you guys some juicy exclusive content. Now I know it's the Red Bull talking. Wait, what's in this? Am I sure this is zero proof? But we do a team 360 review, and it's anonymous. But like we rate, and it's not rate. Everybody is scored as a group, and then there's comments on opportunity for growth. Areas of strengths. And so I always laugh because I'm never in the top. Like maybe I'm in the top 3, maybe, but I'm usually like 4 or 5. I'm like, come on, guys! Like I'm running this thing. I'm out there. I'm like killing myself. Why are you like putting me at like 4 or 5? But it's like the comments are. James is like, he comes in on deals and he's trying to be helpful, but he doesn't, he might not know the details and he's screwing me up, just get out of my way. Let me do the deal. Yeah. So you try to do it all. Nothing's perfect. So there is that give and take. But I should also say, having a really strong director of operations in Erica Dean for my team is super helpful because, sure, I want to be there and I run, training for the sales team, business development type stuff, but most of the learning they're doing is like working on transactions with me. But like the whole, nuts and bolts of running the team, like I'm not, like running around with a clipboard, tracking our activity and everything. So that certainly helps as well.
So you got to delegate that stuff, right?
Yeah.
Because it's a lot of the time, the guy who's a great originator or a great broker, he might necessarily be a good day-to-day guy of like moving stuff along. I feel like we're constantly coming up with great ideas. And then we sit down at our next meeting and nothing.
Brian's the idea guy.
I'm big picture.
Brian comes with ideas like Brian.
and then it's just like trying to actually like get the ball moving from A to B. I've really noticed since we've started trying to build our own thing that really is the secret sauce as well.
Yeah, because if it's the working on the business versus the in the business, and what you find is like sometimes when you're building, right? And I'm so insane that my calendar is color coded, right? So every day, so I have yellow time. Yellow time is internal stuff, right? Where I'm working with the team. Have to do it, but when I'm doing yellow time, I'm not making any revenue because I'm not talking to anyone. When I'm in green, go. I'm out there, I'm doing deals, I'm doing my calls. So like you really have to think about, and at one point my coach with Massimo said, all right, well here's a stopwatch. Why don't you time how much you're spending every single day on these certain activities? And it's like, how much time are you really out there prospecting, meeting with owners? Like you probably think it's a lot, but then when you actually look at the time, it's pretty sad, right? Yeah. Because even if like you could 50% of your time truly spend on external activities, it'd be amazing. But there is the work, the internal stuff that you have to do, the reporting, all that, the getting the BOVs, the marketing, like it doesn't, you can't do the client work without it. So it's always kind of this trade-off, right? So you're trying to bring on the right amount of support and help, people who can help support you on that. But it's always a work in progress.
James Nelson with a Red Bull in his hand on green time is quite a force, I can imagine.
That's scary.
This is purple time actually, which is good too. This is like you guys are gonna definitely think I'm insane, but no, this is like any like promotional like events, speaking engagements, podcasts. Like this is great, right? Yeah. Because we're reaching a lot of people.
Right. With 1 hour, you're able to hopefully maybe hit that. Countless more than you could have if you were calling. Right. I guess that's it. Your friend Ryan Serhan calls it finder, keeper, doer. Yeah. Right. That's the way he breaks. He's another crazy person as well. I feel like in terms of
he's the real deal. By the way. I mean, he is really he's not just all Hollywood. Like you text that guy at like 5 a.m. or 10 o'clock at night, and he's like, I mean, maybe it's not. I mean, we'll see. Maybe one day I'll be like, James, that really wasn't bait. But I mean, you're getting a response. He's on top of his stuff.
He's on it, which is commendable.
Yeah.
So, all right, so that's Brokerage. Yeah, you're building AY. you're buying real estate as well, right? In a limited capacity
Yes.
as an LP partner.
Yes.
So
Yes.
that's probably how you create wealth long term, right? Rather than just doing 1099.
Yeah, I mean, again, as opposed to just being on the sidelines, I certainly enjoy it, but as a broker, you have to know how to do it the right way.
Yeah,
right?
because that could get pretty messy, I'm sure.
Yeah, so for starters, anyone who ever calls me to consider selling their property, I'm not thinking, well, I'd actually rather buy this property. So, let me try to go for that. Like, once you do that, you're done.
Right.
Right? So it's like anyone who ever calls, wants to sell their property, my sole focus is to, get the highest price for them, right?
Yeah.
But if a property is listed by another broker, that's totally fair game, right? Because they're being represented, they're getting their own advice, and great. And, again, I'm not, I've GP'd several deals, but I also have a full-time job. So being an LP is a much better way to go. Back at Massey Knackle, I had brought the idea of doing a fund with Bob and Paul and said, look, let's go. It's so hard to get a $2 to $5 million equity check. It's actually harder than getting a $50 million check.
Yeah.
So let's go raise money to go invest in value-add deals. And luckily, we found a great partner in River Oak. And so we raised $50 million, and we put out money in 3 dozen deals, which was amazing to also, I think, I don't know if this is urban legend or what, but, the Harry Helmsley, remember the original brokerage firms, I think supposedly said you can't even broker a deal until you've owned a deal. So, the idea is like, if you really understand what goes into investing, to buying, operating a deal, it's going to make you a much better broker.
I was just going to say that. I got to imagine it makes you a better broker, right? When we're going down through the expenses with buyers, they laugh sometimes saying, you're putting in these numbers for insurance or for repairs and maintenance. You've no idea what you're talking about. And it's kind of like, that's fair enough, right? I mean, we don't really own and operate these buildings.
It's a level of empathy that you can only get if you go through that process, particularly connecting with sellers. I think that's definitely an angle.
It's a lot harder than it looks, too.
Yeah.
I mean, look,
I know.
there's certainly luck that plays into it. It's like, because we've all seen clients who are like, you can't even add, and you just, doubled your money. And,
I know.
Sometimes it's just, you got to have guts. I mean, certainly the right timing certainly helps. Yeah. But
you have to commend them, the guts that it. Like I know we say, listen, got to raise your offer by X amount of dollars, and they're like, but then that really does like put me in a bad position. We're like, just do it, make the deal.
I just had David Shorenstein. Or you said you saw it on the live stream yesterday on my podcast yesterday. I don't know if you know him, but you got to have him on your show. I mean, this guy is unbelievable. He's now bought like 250 properties, and he's done it by. He has like a robot letter writing machine that like writes letters to owners. Hey, do you want to sell your property? And then, he'd send out like 50,000 letters in a month. And he said that his phone would just completely blow up. And I'm like, David, you're buying so many properties. Like, how you can't possibly diligence every single one of them and know what you're getting. It's like, yeah, but whatever. Like, you're going to make mistakes along the way. And for me, just being in the game and, not being reckless, certainly had a box and there was a certain threshold, but I think there was something for that just to, and he also talked about guaranteeing, going personal on loans, and that might be terrifying for a lot of people. So I think you got to also check your risk profile, and it's not for everybody to sign on the dotted line every single time. But, he's just out there doing it.
And that guy is throwing serious amounts of money into the mailbox, isn't he? I mean, the mails that are going out, I remember listening to him or hearing somewhere, just like tens of thousands of dollars every month, just firing it in and more and more and more. So it's,
but he's buying the majority of his stuff off market, direct, without brokers. So not good for us. But he sells through brokers, of course. But I mean, pretty commendable. I don't think there's a lot of investors who kind of take it to that level.
Yeah. He's constantly sharpening the tool, isn't he? just being sharp, staying on top of things.
He's just opportunistic.
Seems to
he
move
was
with the
talking about
market too,
buying car washes and laundry mats out in Long Island, and he's just,
That seems like an opportunity for brokers. There's not a lot of business brokers out there, and there is a lot of small businesses in America. So it seems like an opportunity for someone.
That would be, the amount of small business. Imagine trying to underwrite them and trying to package them up to sell to a buyer. But I guess there's a million ways to do
laundry mat specialist. I think it's
that's a real
there's
thing.
a niche there.
There is a niche. So tell us about the book. Why did you write the book? And did it? It seemed like there was a gap in the market that you saw.
Well, it was the middle of COVID, so
Okay.
I'm sitting at home. Is it is it the end of the world? Like, what's happening? And for once, we had free time. And so I'm talking to my coach, and he says, look, you can either just wait this thing out, or do you want to do something you'd never have a chance to? So for a long time, people would always ask me, James, what's the book that teaches you how to invest in real estate? And there's like textbooks, there's Rich Dad, Poor Dad type stuff, how to flip homes, and that's great. But like, how do you do a serious real estate transaction? There was like no book that actually taught you how to do it, from start to finish, right? Even if you don't know anything about real estate, right? You could do a $10 million deal, and it's none of this like get rich quick, no money down. But, the premise is, first of all, and it's a lot what we learn in brokerage, like become the specialist. So whether it's a geography, whether it's a business plan, like own the market, know it, understand values, find an opportunity, and then bring it to a partner, an experienced partner who has done it and said, hey, I would like to partner with you. I found the opportunity. This is the business plan. Can we team up and do this? Because that's the number one thing that I think holds investors back. They see either, lack of knowledge, of course. So we learn by doing, we learn by listening to shows like this. But the lack of capital is real. Like a lot of people like James, I wasn't born with tens of millions of dollars, and I see you guys sell a lot of expensive stuff. So you get a partner, right? And then after you've done a couple of deals with partners, then you've built up your own track record and hopefully your own investor base. So I just wanted the book to be super actionable. It's a lot of fun. I end up guest lecturing at a lot of the schools, and it always amazes me. Like I go, and I don't want to pick on some of these Ivy Leagues, but you get really smart students, great analysts. And then you ask them, well, like, how do you buy a property? And they just look at you like, what do you mean, how do you buy a property? I said, well, how would you go about finding a property? And they have no idea. Well, they said, well, I'm just going to be the analyst. I'm going to run numbers, and then, I don't know, the acquisitions department will handle that. Well, like, don't you think you would be a better analyst if you actually understood, like, what goes into buying a property, and vice versa? So it's just, it's meant to be really practical. And I think the show that I do, it's the same format every time, but how did you get into the business? How do you tell us about your first deal? Like, I love hearing Bruce Ratner, one of the most prolific developers here in New York, talk about how he had to scramble to raise $25,000 for his first deal. And, now he's, I think he sold out his stake in the Brooklyn Nets, but, it's amazing. Everybody starts somewhere.
Yeah, for sure.
There's a lot of them great stories in New York City real estate, which is why we're here. That's why we love being here.
Yeah, I think that's what motivated us, right? So. But yeah, I mean, so what's next for James Nelson? You've kind of done, I would say, maybe everything you can do as a broker, right? Where do you see the next?
Well, I see an opportunity now, without getting into too much details, but I think, first of all, I would say that you would think that there's been consolidation in the industry amongst brokerage firms, and at least my experience in New York is it's the exact opposite. You have all these incredible boutique firms and people spreading out. So it's just opportunity. Like, the market is still wildly inefficient, right? And that's part of what I talk about in the book, the insider's edge to real estate investing. Why is real estate investing so great? Because you can get the insider's edge, the advantage, right? It's not like investing in the stock market. Everybody has the same information, right? In fact, as a retail investor, you have the least amount of information, right? So, but real estate, like, how much of this stuff happens quietly, off market. You've got the comp, but do you know what the cap rate is? No, not until you call and you get the information. So the point is, like, you can really, take advantage of markets like these. And I think the same is with brokerage. Like, so much of this stuff just gets sold owner to owner, and so there's certainly an opportunity, for brokers who build out teams and know how to cover, to pick up market share. So I think, that certainly still exists in New York, which is the most competitive market, I would think, in the world. But I also think there's huge opportunities in other major markets. And I've been following, and maybe it's because my oldest son goes to USC, I've been tracking what's going on the West Coast. And everybody loves to hate on LA and San Francisco. Do you know that San Francisco last year, there was $13 billion in sales? Do you know how many sales there were in New York? $13 billion. Wow. So there's, now granted, I'm pulling in San Jose and the rest of the Bay Area, but the point is, these are big markets that everybody are saying are horrible. Well, someone's selling properties, so maybe they're selling and they're leaving to Texas. I don't know. Yeah. But fortunately, Avison Young, we have 60 offices across the country. So right now, I'm spending a lot of time thinking about, how can we team up? how can we get involved in other major markets? And we've already brought, several opportunities to market with New York clients who, own in Atlanta or Charleston or wherever, and we are getting really good results when we go to market. Like we're selling a 200,000 square foot office building in Charleston. We got 150 comp fees signed for it. If I get 150 comp fees signed for a New York deal, I'd be thrilled, right? So there's a lot of opportunity there. So again, as I started off by saying about the market here, like we do not want to miss out on these next couple of years. Like don't take your eye off the ball. However, I am thinking about like how do we do that and start to kind of tap into these major markets that are out there.
So you're going nationwide.
We shall see.
Oh, wow.
We'll have for a future podcast.
You got 3 boys?
I have 3 sons. Yeah.
Any of them come into real estate?
They all. Well,
would you recommend they do?
Well, my oldest is all right. Dad, when can I start working for you? And this was,
nice.
Paul Massey would always, told his kids, you go and you're working for somebody else. You don't want to just. Because even if, they were ready and they were a good candidate, then everybody's always questioning, like, is he just there because he's, someone's son?
Nepotism.
So, and you also want them to have that experience and also, hopefully going to school with an open mind. I mean, I love real estate, but, they've got to see what else is out there. So, I don't know. I tell my middle son, who's really big into sports, I said, you should be a sports agent. Like, I think, if I didn't do it all again, I mean, listen to this. So these sports agents, not only do they make like 2 or 3% on a contract, I think they get 20% on endorsement deals. Like, this is like, search it. The top sports agency, they pull in $1 billion of revenue a year. Like, that's insane.
It is insane.
That's a cool job as well.
That's insane. And by the way, like, NCAA, NIL, like the doors are like blown wide open right now. You can pay for athletes now. Who's doing all those endorsement deals? Right? So I don't know. We'll see.
What's the movie?
Maybe I'll do it. You know what? Forget real estate.
What's the movie?
More Red Bull.
Jimmy Maguire.
Jerry Maguire.
Jerry Maguire.
That's
right.
Yeah.
That's a cool job.
Well, that's literally what that is, right? But it's. I guess if you can't, that kind of business, it sounds like you're encouraging them to be entrepreneurial, I guess.
Just open-minded.
Which you kill.
And who knows? I mean, look, with AI and everything going on, I mean, it's just the world's going to change so dramatically. I mean, who knows in 5 years when they're out in the job world.
I guess the plan is that you're always going to need someone in the middle of it all to try You
Yeah.
think of these personalities, especially in New York City. I mean,
oh, for sure.
Just the conflict
for
involved.
Sure. We get clients who still don't read email, like, you know, so.
I would pity AI trying to figure it all out. Like, it's just like, this is just way too deep.
Very true.
But we could definitely leverage it. But I guess in closing, listen, we're really grateful to you for your mentorship and your friendship, and we certainly love watching you out there. We think you're like the ultimate sales guy when it comes to commercial real estate. You're everywhere. And you are a great inspiration to guys like me and Mitch.
Thank you.
Oh, that's awesome. Well, guys, this is so much fun. A lot more fun than my show, for starters. But no, it's great. You guys are doing it. Like, that's the important thing, right?
Yeah.
I was on another podcast yesterday, and you know they're like, "Oh, is the setup right?" It's like you're doing it, right?
Yeah,
you know, we
just
can
go
always
for
do
it.
You know, I mean, this is a good setup, though.
Well,
And these, are you
sorry,
between?
guys.
Are you between two ferns also? That's a show.
That was totally
look that
accidental,
up, right?
yeah.
Zach, what is
Zach
it?
Galifianakis.
Yeah, two
Yeah.
ferns.
We were going to sit you there, but it might be a bit
It's-
intense for minutes. On top of it.
Yeah. We're like, quite frankly, day to day, we don't have a clue really what we're doing,
Right.
but we keep trying, and we made a pact when we partnered up. We're just gonna keep doing it and see where it takes us. So.
All right. Well, cheers to you guys.
Yes, thank you,
Cheers.
thank you,
All
thank
right.
you.